The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Hi guys, Steve's off today. I'm filling in for him. I'm John Logan, and we're in Asia. Steve's usually in Florida, so this is a little different probably for guys tuning in to see Steve. Thanks for joining us. Here we go. We're going to start taking a look at some charts really quick, but we're first of all going to take a look at our profile scanner. If you guys hadn't had a demo of this, this is our desktop version. We call it our Scanner Plus, and we're working out with Tom O'Brien to get you guys access to this. We've got our web version up on for demos on the TFNN site right now. But as we look at this, we've had a little bit of a bump in the S&Ps. We've had, again, this is our breadth situation that we follow. It's only available in this particular product. It's a pretty unique way of looking at the markets, looking at the rubber band stretching out a little bit too far and maybe snapping back sometimes. That's kind of the math behind this. If you don't know what's behind this, let's just quickly drill into one of the software products that basically runs my trading career now, and we're going to go right into this breadth. And what's the definition of it? We're going to take a look at our weekly chart really quick here. And as I look at this, what does this actually do for you? And on the web scanner, it's a little bit different. Same information. The reason I'm showing you this today is just wanted to try to get Tom going on this. Basically, it gives you the numbers of the S&P 500 in general and what the internal components of that index are actually doing relative to our profiles. So as you can see, this is our weekly breadth chart. Now, 191 stocks out of 500 are trading above profiles right now. 1.4% of them are creating a new profile above right now, which is not a big deal. It's not a big number. It's a very small number. 7 stocks trying to create new supply areas up top, if you will. 257 stocks are inside. That's a pretty big meaty area. As you can see, looking at the chart, if we go over here, the blue line going higher and higher usually predicts mediocrity. And that is on our weeklies, even though we're kind of breaching above weekly unfair highs right now, 2063 on the S&Ps on the June contract, and we've traversed above the dailies. This middle ground continues to rise, and that means that the signal in itself is really not as strong as we want to see in a breakout type fashion. Now, 47 stocks on a weekly are still trading below. That's 9.7%. This is updating real time, as you can see, and new boxes below 12. So that's really insignificant on our dailies. You get the similar situation here to just kind of analyze for yourself. You can come in with this product, kill the middle ground if you want to, and just focus on what's going on with got some people coming in on the night shift right now for our some of our support areas. But as we look at these speedometers, if you will, on down the line, you're going to notice that the breadth is a little bit different on each one. So each time frame is usually a predictive type indicator in itself on those time frames. And when we do automated trading systems, just to kind of give you a little bit of history here, we totally rely on the breadth of the market on the different indices. And I can pull these up on Shanghai, Bovespa, Nifty 50, Eurostoxx 50, Bursa Malaysia. We completely rely on these breadth indicators in our automated strategies, whether we're supposed to be taking longs or taking shorts around the profile unfair highs and unfair lows. So it's a great tool from a broad market, tie to the marketplace type situation. I haven't found anything any better. We've recently put in a paragraph type dissertation on what we do. So, let's just take a look at Apple. Apple's kind of come back down into the daily fair auction or the middle of the profile. Gray got a little bit of movement on the 60 here, but it gives you a relatively text-based view. So, you don't have to wait around for somebody like me to kind of tell the story. It tells the story for you. It was a really cool endeavor. Some of our programmers got this together. long-term view on Apple prices in the upper part of the balanced area, which is between 130.76 and 125.08. We're still in a long-term trend up. New breakouts are above on a long-term basis, above that 130.76. Long-term supports at 122.24. We hit that almost to the tick the other day, and that story really, I think helped a lot of folks. Trend changes will happen when closes below 122.24. So that's the long-term view. We've got an intermediate view, and we also got a short-term view. Really neat addition to this product that I think clarifies quite a few things for people who are using this for the first time and maybe don't have the the background they feel like is required to use this scanner, even though I feel like it's pretty easy piece of software to use. So right now we're going to get away from automation. We're going to get away from the paragraphs. We're going to go into, we want to try to find things in stocks that are not actually cooperating with some of these moves up. And if you remember, I go into our weekly, if you remember, we looked at 48 stocks trading below profiles, right? And that means that 48 stocks are really not getting out of their own way as the market drifts higher. Well, there's 48 stocks right here. I did a little filter that gives me a chance to look at weekly candidates that are not actually drifting higher and actually still trading below what we call that meaty part of the bell curve. So let's take a look at a couple. Applied Materials, that was on our radar screen the other day. Fleur Systems, Fossil. Let's take a look at Fossil. I haven't been a big fan of this, FOSL. And we always try to look at stocks that, are a relative strength trade relative to the market. We talked about this. We talked about it actually the other day, hoping we can get back up into unfair highs. Here's that 85.54. Now we just kind of drifted four and a half points lower. Now we're trading below profiles. This is not the type of candidate that's on sale and one of the best stocks to put, your investment capital into from the long side without question. Scanner picks it out. Let's take a look at a couple of things. Norfolk Southern, NSC, UPS still up there. Let's take a look at those. NSC. Here we go. And here we go. So we got below 102.94, 101.04. So let's just look at this for what it's worth now. Now you got a leverage point on the weeklies around 101.04 to short against. And again, this is something and here we go. Here's our daily situation. This obviously is an earnings related situation from yesterday. But we're going to look at that 101.04 as kind of a cap, a battle point, a major inflection point that we got to pay attention to on the long side, and all stops based on the short notion have to be above 103 if you're going to play that game. Let's take a look at CSX. Okay, this was another one that, I'm a big fan of picking battles around these weekly and daily unfair lows. 32 combined, excuse me, 33 up to 33.41. This is not over. Hold on. Let me just tell some people. I still think this is a short. We're trading about 33.41 right now, so kind of in the wheelhouse of these major inflection points pre-market. I'm a big fan of shorting CSX. That's the way that works. Let's take a look at UPS. All right, this has been, one that we've just tried to pay attention to, keep on the radar screen below 100. I love it, and stops above 100. I know we're trading 96.55. I just, I've lightened up my position on this, and I think that, it's got some play in it. It might do a little bit of quick rally type action, but we're going to continue to stay with UPS on the short side. We're going to take a look at the euro and the US dollar in just a couple of seconds here. Let me pull up the dollar. And here we go. Dollar's kind of bouncing around today. Remember, you got some major support on the dollar around 98.75. That's what I, in my opinion, need to start looking at as stops oriented below that area. will the dollar move higher? I think the dollar could reach 178.79, but there's no sense in suffering any more downside if we can't stay above and consolidate above this 98.75 area. So that being said, let's look at the euro really quick. And as we look at the euro, this is something Eddie was just screaming short yesterday. Clicked it right off the scanner. And I'm going to go in here to the scanner and show you how that works. Some of the guys are new to this hour, so we're going to, let's see, pick that out, get rid of that. And we're going to pull up our currencies. And I've still got a sword on. Hold on. There we go. Okay, so see how this British pound is doing the bottom thing? That's what the euro was doing yesterday. And it's showing you that we're right in the wheelhouse of coming up into multi-time frame confluence on some of these profiles. So 107.02 was the euro, kind of stops above there. The dollar looks like it's just kind of rattling around to move higher again. The euro obviously is about 30, I want to say 32% of the dollar component comprised. So remember, this is not an inverse relationship, but it definitely pays attention. So if you're trading the euro, keep your eye on the dollar and look at those dollar Maginot lines around. I'll just restate these. Around that 98.75 area. Okay. All right, we're going to take a look right now at IBM. Something that just going to pull up our dailies first here, show you that we're within the fair auction, and on the weeklies we've kind of traversed above. Now, what does this mean? We always talk about, you know, what takes precedence over what, and you want to, in my opinion, drill down from the longest time frame, the weeklies in this case, down into the dailies, down to the 240s, down to the 60s, and as you keep doing that, the relevance factor is always more heavily weighted on the longer term. So the longer term in this case is the weekly. 160.55 is going to have to be breached on the downside. And I know we did that the past month. This stock can't get out of its own way. Fundamentally speaking, they got some problems. But technically speaking, we want to wait until we get down below 160.55 and keep turning the rents the same way on the short side and trying to, you know, weather the storm if we have any rallies. I fully believe IBM is going to, you know, come unglued at some point again. And remember, this was the only down Dow stock in 2013, and I've got to do a little bit of research on 2014 to see where it landed on that one. So this one is not on sale. We'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Here we have Tom O'Brien on the phone with us.
What's
Is that
happening,
true?
brother?
It's good to hear your voice. How are you?
I'm doing great, man. How you doing?
Good, good. Letting the scanner try to run my life here.
That's a beautiful thing, man. I mean, scanners are us.
Man, it's picked out some good dogs here, you know?
Yeah,
on the relative strength scene.
There's no doubt.
Yeah.
And so you got some new clocks up the top, too, don't you? I'm looking at this.
Yeah, I got to coordinate this with you guys. I hope today. I know I've been kind of on a different time schedule, and that's been awful to try to coordinate this. But this is our desktop version. It's called our Scanner Plus, and I think we've got the web version out on your. But it's really got some cool features in it. We've actually put these paragraphs in finally. I'm really proud of these things.
The paragraphs are huge, man. Right.
Yeah. Very cool.
So you get the long-term view, the intermediate-term view, the short-term view, right?
Yeah, and it's basically, for folks that are kind of coming into the game and don't wait and listen to me to try to kind of talk about a certain stock on a certain day. It really will give you my thoughts, our company's thoughts on really what's the landscape going on here. You can come in here and kind of look at where the multi-profile landscape is, but also kind of get some biased opinion of whether you're really supposed to look at this from the long side or short side. But the good news is, Tom, is that you come in here, you kind of find what you're looking for on the filters, and then let's just say we're looking at Potomac Electric Power here.
Yes.
You come in here and you're looking at what do I do with this thing? Okay, trend is favorable to shorts and has been enforced for 2 weeks with primary long-term resistance. Here, it really gives some pretty pinpointed information, and that's what I think a lot of maybe this product really needed for a lot of people out there who aren't going to take a multi-year webinar class on what we do. So it just kind of cuts to the chase pretty well.
No, it does. I was thinking, and I think this is my question to you, right? So yesterday, right, when the gold market, got down to those numbers, right?
All right. Yep.
What I was thinking is that, okay, would it be, I know it's possible, but would it be something that you'd want to do is that prior to the market getting down to that number, let's say particularly whether it's oil, gold, or the S&Ps, because I trade those a lot. Do you know what I'm saying?
Well, gold hit it almost to the tick yesterday.
No, I understand that. But my question would be is that put the order in prior to it, and, with Think or Swim, you can put the order in, and once the order is executed, you can put multiple orders. You can put, when this is executed, great, immediately you got to stop on the other side of it. Do you know what I'm saying?
Yeah, there's some conditional things out there for sure, and I'm sorry to complete your sentence for you, but I think I know where you're headed with this.
No, that's where I was headed. Exactly, right.
Yeah, there's some really cool conditional, which wasn't available back in the day. If you know what I mean.
No, that wasn't available 15 years ago. It is now, though, which is great, right?
Yeah, this is really a dream from a, okay, I've done my best homework. I see where the battle should be.
Yes.
And how do I kind of set my risk rewards if that happens? You can do all that ahead of time. And I don't do anything until we get near these, what I call high probability areas for trading.
Right.
And that case in point, gold yesterday, I'm not a big fan of going short gold in any big way right now. And I love actually how it's holding up in the face of this dollar situation. So therefore, I'm still looking, me personally, to look at inflection points to buy. And you kind of pointed out something that I really haven't elaborated on enough. I don't think. It's just, and we may fall through, as you know, but like you said, the stops are already in below 1182, and the targets could be in at 1215 as far as that's concerned.
Yeah, no, it's interesting. Hey, I missed you. I was just jumping in the car from my house when you had Eddie on.
Right.
And was it oil you were talking about? Is right now? I'm trying to figure.
Yeah.
I was figuring it was oil because you're at 54.23. So where are we at in oil right now?
Okay. Yeah. Got about 10 seconds for a break.
Okay.
I know you know how those things go.
Listen, man, let's get this trade out in 10 seconds. No, I want this trade right now.
Okay. So
I'm only
oil,
kidding. I'm only kidding.
All right. Well, hang around, please. Okay. We'll talk about it right when we get back, folks.
Cool.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. I think we have Tom still with us. Tom, you still there?
Yes, sir.
Well, thanks for scaring the pants off me trying to get the oil trade in. I was like, what's going on here?
That's too funny.
I tell you what, Eddie and I have been, in a debate about this.
Yeah.
And,
that was a good conversation this morning, right?
Well, the way I look at it, I'm just trying to eliminate things.
Sure.
And Eddie's got some great, God, he's been killing it this year.
Right.
And I can't argue with anything he's doing right now. But he's got some option hedges kind of surrounding some shorts, and it's kind of really completely short that up, completely delta neutral at this stage. It's just kind of like waiting on the sidelines.
Okay.
Not completely getting stopped out or exiting the position. But the way I look at it, Tom, and you may have heard this, is you got the dollar should have brought this thing down. You got just massive bearish news out there, in my opinion, on the fundamentals scene.
Yeah.
You got a lot of Yahoo hedge funds out there that are just getting short like crazy this thing right now.
Right.
And it seems to just kind of go up on nothing. It just kind of like it's like in the ether, kind of just floats up and that's kind of scary if you're short right now, in my opinion. So I'm looking at it, and, I don't know how you're looking at it lately, but above 53.67, just trying to put the leverage there. The stops below that DMZ between 53.67 and 52.71, and let's just see what's going to happen with this. See if we can float higher now.
Yeah, that's why. So, like this morning, we've hit 54.42, and I'm looking. I'm saying to myself, this is kind of interesting because let me just we're still in the K contract, right? 1 second.
Right.
Okay, so it's still in the K contract.
Pretty sure we are. Yeah.
That little baby, should basically have some real firepower underneath it, and I don't see it out here this morning. And that's what I'm looking at. That I'm saying to myself, I kind of like that area. The reason is meaning like that area to sell it. I'm not going to sell it just yet. I want to see a real rejection of it. But thus far, the last time we were up there, let me see this for a second. Sorry, man.
I'm hearing what you're saying, but I'm not seeing people not wanting it to be there. You know what I mean?
Yeah.
I mean, it's kind of like, okay, we got there. If you're already short, you got to be wondering, why aren't people rejecting that? You know what I mean? It's like, it's a little concerning. Again, oil's a crazy thing. It may reverse and get back down below that DMZ I'm talking about, and then that's going to break some people's hearts, like mine. but
where are the? I guess my question is, John, is that where are those profiles set up right now? That's what my real question is.
Yeah, I'm going to go into
because those are the kings. We know those are the kings, man.
Without question.
Yeah.
Let me just get rid of the S&Ps here. And the thing people will probably like about this desktop version, it's really, really quick because it's an application. It's not a web page.
Okay.
So I'm going to pull up our futures here.
Yeah.
And I'm going to go down into crude oil here. So I'm looking at it, and
nice.
I'm seeing some greens here. I'm seeing the top.
We're greens. I got it. Yep. Okay, cool. Okay.
And there's our I mean, it's just
listen. What's so funny is that I think I told you this before. The only trade I went against those in the last 6 weeks was the bonds, and forget it, man. That was the first time I went short bonds in, oh my God, I don't know if it's 2 or 3 years. And thank God I just had to stop on the other side. Forget it, man. Do you know what I mean? And sure enough,
I tell you,
yeah.
That's I gave up on that years ago. That was, I mean,
it's amazing that the bonds are going to go to the high now. I mean, yesterday was amazing. I mean, wide price spread, accelerated volume. They basically did the same thing. They're doing the same thing this morning, man. I mean, these things are taking off again.
It's incredible. I mean, and talking about the bonds and the notes, and you've got. I mean, think about it. I mean, the Chinese are having a so-called slowdown where their growth rates are only going to be 7%. You know what I mean?
Right.
Wow, that's. What is the growth rate in the U.S.? I mean, you probably know it better than I do.
They're claiming 2%, but they're having a problem keeping it up to 2%. Do you know what I mean?
Okay, well, I thought it was around 2. I didn't know the decimal points after that. But, yeah, I mean, but, again, we talked about this a year ago. It's like, we enabled these people to think like this, these governments, these central banks. And now, oh, God, we're slowing down to 7%. Let's start up the propane,
Yeah.
And,
big time. Big time. It was interesting. Paulson. Folks, and you want to check this interview out. Henry Paulson, the guy who was the Treasury Secretary, the head of Goldman Sachs. He was on CNBC this morning. He's got a new book out. In fact, I'm going to see if we can get him on. It's all about China. Man, it was a great interview. Well, it wasn't really an interview. He was giving some great information out, though, and he was explaining that the way that the government works over there, they know that the model is broken right now, and they're going to try to fix it. And, Joe Kern on the other side said, "Don't you think it's too late?" He says, "No, I don't think it's too late, but, they're trying to deal with it as it's going on." And the bottom line, you know what he said, John? And then, folks, this is pretty amazing. What he said specifically, he says, "Hey, listen, the model is take the people's farms, build infrastructure, have the municipalities issue the debt, and that's it." He says, well, guess what? He says, that's worked. He says, but now they're going to change that because there's going to be less land, there's less of everything, and they're building out. And it was like, man, this is, so I want to listen to the rest of that, too, because that was an intriguing interview. Because what we do know anything that's when something's going up, it's all about cash flow. That's all it's about. You know, it doesn't.
Right.
It's not about. It is about making money, folks, but it's about cash flow. It's about how much can you get with your signature. That's the bottom line. You know, and you know, every scheme is a Ponzi scheme anyway inside governments. There's no two ways about it. You know what I mean? So it's like, how long can they keep it going?
Yeah, I mean, what blew me away, talking about one of the things you just detailed in your statements there, were you know, they want to take some farms and they want to, you know, get the municipalities to issue the debt and build everything out. And now they're realizing, you know, what are they going to do? You know, case in point, I was shocked when I got to Shanghai. Literally, I mean, I was terrified. It was a terrifying experience. I was like, my God, it was like The Matrix. I don't know if you remember that movie. You look as far as you can see.
Right.
As far as the earth rolls over, you see pods of buildings, and what they've done, they're all brand new in Shanghai. They just bulldoze most of the city. But down in the financial district, which is where I pretty much primarily stayed in,
yes,
you know, they took that Pudong river basin area down there, and they, you know, those rice paddies and I mean, I'm talking thousands of hectares, thousands and thousands of hectares. They shoved all the farmers out, and they just said, you know what, we're going to build the entire. They've got buildings down there that make our Library of Congress look like an outhouse. There are huge, huge buildings down there.
It's pretty impressive, man. I mean, it really is. You know, even though it's a slave labor-driven deal, it's pretty impressive. There's no doubt.
Yeah, if anybody ever goes there, you're gonna land in the airport in Shanghai. They can fit LaGuardia, JFK, and Newark into that one airport, by the way. I mean, it is enormous. There's nobody in it. I mean, they're building for the future as usual. But you got to take a causeway for, I'd say, 20 kilometers into, you know, Shanghai.
Okay.
And it's 12 lanes on both sides from the airport. And nobody's on it, but they are just ramping it up and getting ready. You know, I mean, it's getting a little more, you know, populated now, but as far as the traffic there, but I was shocked when I got there, just stunned.
Yeah.
I was also stunned that, you know, I was thinking too, I don't know if you've been there lately, but you know, you think, okay, you know, people are getting paid $100 a month and they're, you know, living in a closet or whatever.
Sure.
A damn cup of coffee in the Shanghai airport was like $7.
Yeah.
You know,
Listen,
I mean, it's like,
yep. And, you know, if I've learned anything, the expansion of wages of anything, percentage-wise, it can go up a lot quicker than folks think. You know what I mean? When you're at $100, you know, a week, bottom line, you go to 120, but you're going up 10%, and that, you know, large number deal, percentage-wise, goes up pretty dramatically. And, you know, once you start getting to larger numbers. So
right.
You know, I listen, it happened in the United States. You know, people went from 7,000, 10,000 in the 50s and 60s all the way up to 40 and 50, like, you know, 30 years later, you know. So it's, you know, it's out there. There's no doubt. And and how about the exchanges? Oh my God.
Well, you mean what the Hong Kong kind of
exactly.
Yeah, Joey's renting a he's renting a huge boat in about a week and a half for us to go over there. He's made, like, just to, you know, do something crazy, because he's basically made doubles on all the Hong Kong stocks he was holding on to. He's happy as a pig and whatever.
Yeah, no, listen, you just went from 23,000 to 27,000 in what, a month? No, not even a month. Not even a month. A lot of those Shanghai more closely related stocks on the Hang Seng are, I mean, they doubled. Yeah.
You know? I mean, it's incredible. I got the Shanghai up on the speed dials up here on the breath indicator, and I'm pulling up the paragraph. So it says long-term TAS breath, and it coincides with their intermediate breath, but both are positive. Okay to be long, not okay to be short. Long-term buy support is that there. We need to round that off.
Oh, that's cool. Yeah, okay.
But reason I wanted to bring that out was I've got the Shanghai up on our charts, and some guys were asking, you know, like when we were talking to Joey last week, he was talking, or 2 weeks ago, we were talking about, you know, if this thing pulls back, you got to buy it, but you got to maybe wait. But if it consolidates for a while, you got to chase it. And that was around 3,700.
Yeah.
And we've gone up to like 4,200 in 2 weeks since we talked. And we've had a profile appear well below. Now, that's all in the scanner, and that breadth talk I just gave you is absolutely true with these numbers. But if you're looking for support on the Shanghai, I'm drilling down into one time frame lower, because you don't want to give away the farm, if you don't have to,
right.
Trying to hang on to something. You got 40.46 sitting on the bottom of our profile on the Shanghai, and then you've kind of bounced off this unfair high up here. So you got short-term support and buy points around 40.46 on the Shanghai, and these are all delivered in the scanner. So just wanted people to know that
that's
this
some
may
great
not be
information,
over.
man. Yeah.
Yeah, it may not be over. I mean, this is, like Joey said, these things in Asia, they get going one way, and man, they just.
No, they do. No, I've been listening to you, talking about, and there's no doubt, man, there's no doubt that they just explode topside.
Yeah.
It's going to be interesting that when you do look back, though, even in 2007, it did the same thing, and it gave it up first, too. It gave it up about 3 months before our market gave it up. So it's going to be interesting watching that thing shake out, man, It's
really weird. Like you mentioned something the other day, these S&Ps are, they're drifting higher. They're obviously a little stronger this morning after a reversal yesterday. But I don't see people. I don't see this exchange, this index. I'm sorry. Really, it's kind of languishing, and I don't know what your thoughts are on it. I mean, the breadth is still positive, and we've kind of really kind of almost fluttered around with the negativity and the positivity going back and forth. It just doesn't feel that strong to me, and I've been kind of saying, maybe this is not the one to buy, but it's not the one to short, but it's not the one to buy. What's your thoughts on it?
Well, this is pretty cool. So what happens in the S&P in particular is that we have the futures, then we have the cash, right?
Right.
So the cash, the benchmark I'm looking at the cash is 2097.43.
Yep.
Now, that number, folks, is the top of the 25th where the market got trashed. And what I dug yesterday was this, is that the futures closed over that swing point, okay, of the 25th. Well, the cash couldn't. The cash was 2 points underneath it. Mm-hmm. That's important, the way I look at markets. The reason being is that what I learned in about 1994 is that I was trading with this other guy, and we were using the futures quite a bit. And I said, man, hold it. This cash seems like, it could be a better deal because the futures, and I got this out of one of Mark Douglas's books. I think it was Mark Douglas's books. And he was saying that, the guy was sitting beside a guy in the futures pit. You were probably there at the time. And the guy he was saying he's good in technical analysis. He says, hey, that can go there. And the guy says, oh, yeah. And the guy turned around and sold 200 contracts of wheat and just blew it by the number, right? And he says, okay, so now what do you do, right? And so when I was looking at it, I says, you know what, hold it. But the cash, what happens with the cash is that all 500 stocks have to trade. And it's only traded during market hours. So I says, that would seem to be more accurate as to, not accurate, as to really what the market breadth would be, where they're going. And so I start using the cash at these swing points versus the futures because the futures can get pushed very quickly. Do you know what I mean?
Right. Exactly.
So that's a number I'm really looking at really closely today. Will it fail again at that number? And if it does fail at that number, that's saying that, listen, just like your breadth things, internally this thing's not there, man. At the end of the day, at the beginning of the day, you get Goldman, you get someone else pushing, like, give me 200 contracts. And that's all it takes to push it over these numbers. You know what I mean?
Yeah. Man, great insight. Thanks for coming on.
Absolutely, man. Thank you so much. We really appreciate it. Look forward to the show tomorrow, John.
Great.
Thanks.
I'll talk to you later.
Okay, great.
Cool. Okay.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the Trader's Edge. I'm John Logan. Steve Rhodes is off today. Basil Chapman is going to be joining us on the next hour. You'll thoroughly enjoy him if you've never listened to him before. He's just the Methuselah of technical analysis. I love listening to him. I tell you what, I've got on my screen right now our profile scanner. I've got up our XLE, and one of the things Tom was kind of wondering about a while ago when we were chatting was, you know, what's the situation on oil? And here's the XLE. I mean, there's like, I mean, this is on every time frame, by the way. I see 4 red sails. I hope, Tom, you're listening, because this is a really, really good indicator of how this thing may go down. And when I look at the XLE, I'm going to pull up the XLE really, really quick. We've always preached that this is the easier little situation to pick off as far as the oil trade. And we've been talking about stops below 76.19 for a long time. Now we've got to kind of, you know, mitigate that a little bit higher, because that's just you know, that's 5 points lower here. So, you know, the XLE, we've got a lot of internal components that are looking great. It's been the trade to be in. Here's our 240s pre-market, 80.39 short-term support. But remember, we've got that also 80.02 weekly and Friday. So you got a lot of support down here, and you know where to say uncle on this trade. I like how the internal instruments are looking, and I'm going to just kind of pull these up one more time. I don't see any bad eggs on the grid here. I mean, you know, Marathon Petroleum maybe not the best one, but you've got I mean, this is insane. This is really, really what you want to see for breadth. And by the way, and this is the Shanghai Speedos up here. Let me get this off. By the way, we've got breadth coming up on the internals of all the ETFs that you're seeing here and more. And we just added the FTSE. Here's a FTSE up here right now. Boom. I can look at multiple instruments at the same time here. All right. I hear the music. Guys, you've been great. Got a short break here on the end. We will be back. Yeah, I'll be back again tomorrow on my show, and hopefully Steve Rhodes will be back on his. Mine starts at 8 a.m. Thanks for joining us.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.